Tuesday, December 11th, 2018, Maneco 64, home of alternative economics and contrarian views. This morning I'm going to talk about Goldman Sachs, and there's an old saying, what's good for General Motors is good for the country. I'm going to say that what's good for Goldman Sachs is not good for the country, even though what's bad for Goldman Sachs could be forecasting a big crisis. And I want to talk about what's going on with Brexit, the British pound or cable, XgCTCWb, the pound in gold terms, and the fact that we were supposed to have a vote in Parliament today, December 11th, for the approval of Theresa May's EU deal to leave, for the UK to leave the EU. That's all up in the air now, so I'll talk about that. Before that, of course, I'm going to look at the markets, see where we are this morning. It's about 7:35 a.m. London time. Of course, yesterday the markets were down quite substantially, the stock markets, and they did rally and finished slightly higher on the day. It wasn't a great gain. We broke some key supports intraday. We broke through 24,000 in the Dow. We broke through 2,600 in the S&P, and we broke below 7,000 in the Nasdaq. So was the PPT out there? Maybe, but personally, I think the technical picture still looks not good. We could have what people call a Christmas rally for the next couple of weeks or so, but I don't think, you know, longer term or medium or longer term, the markets are out of the woods, the stock markets, that is. So the Dow finished up 0.14%, S&P finished 0.18 yesterday, Nasdaq finished up 0.75. So where are we this morning? Well, gold looks like the 1250 level is the resistance. Now, we did trade above that level early yesterday before the markets opened in the US. We're now at 1247.30, up 3, right near the highs. The high's been 1247.99 or 1248. The low's been 1243.50. Silver's rebounding a little bit here, is at 1458, up 6 cents. Range has been 51 to 1463. The Dow, that's up 30 points right now at 24,451. So up 0.13. S&P is up 2 points. Nasdaq 100 future is up 7. So markets are fairly quiet. The pound is up slightly, but we broke through. Pound had a really bad day yesterday. It was down 200 pips, over 1% lower. Broke through that key 27 level, and I'll show you here though. It really, I've been looking at this head and shoulder here formation. I've been talking about that, and look like how he just held the neckline, and that was around the lows yesterday, which is just above 125. This morning I want to look at XAUGBP as well, how the pound is done against gold. As you can see here, since October, when we bottomed around 900, we've rallied almost 100 pounds. So we're at 996. A longer term chart that I've got here, you can see that we've been forming a massive teacup and handle formation in the pound. And we're very near the top of the teacup. That's coming in around just above 1,000, around 1,003 this month, and a little lower next month. So Euro 113.75, up 18 or 0.16%. The dollar's down against the yen, 0.2% at 113.12. The dollar's down 0.25% against the Chinese yuan at 689.60. Crude oil WTI 51.16. Brent is trading around 60 right now. US 10-year yield 287, up 1 basis point. So there's a lot going on right now. I could talk about what is going on in France, but I'm going to talk about Goldman Sachs and Brexit. I'll start with Brexit. So today we're supposed to have a vote in Parliament for Theresa May's deal that she made a few weeks ago with the EU to leave the European Union on March 29th. And it wasn't going to go well. I think she was going to lose massively by over 100 votes, and that would have, she would have been over. So, and I was reading a little bit about that in The Economist for this week, the best way out of the Brexit mess. And you can see that that forms a number 2. So their idea is that we should have a second referendum, even though they say, well, you know, it's not really the right thing to do a second referendum, but there's no other way. Things are just going out of control. So they want a second referendum. But they were saying that if she lost the vote that they were supposed to have today by 50 votes, she could have maybe had more leverage, go back to Brussels and negotiate. So I think she was going to lose massively, so she just called off the vote, and now she's gone to Brussels to try and negotiate. The Telegraph, which is a very conservative newspaper in the UK, what are they saying? It says, Mrs. May should have gone down with her deal. Instead, we continue to be led by a mule flogging a dead horse. It is intolerable. Theresa May set to meet EU leaders in desperate bid to salvage a deal. EU insists it will not renegotiate deal as Guy Verhofstadt mocks Theresa May and says, I can't follow anymore. Also says the Tories are on the edge of their greatest crisis in modern times. MPs must rally together. For the sake of the country, the Prime Minister must step aside. There you have it. Things are really uncertain. The pound, I think a lot of that uncertainty was seen in the move in cable yesterday. Do I think cable is going to keep going down? Yes, medium to longer term. Maybe right now, short term, it could be a little bit oversold. Could rally back, but it still doesn't look good in my opinion. So, Goldman Sachs. I've been speaking about Goldman Sachs since, November 13th. I made a video entitled, Will the BIS Save Goldman Sachs? November 26th, I made another one saying Goldman Sachs, Enron, and the chart of bankruptcy. And I won't go over those videos right now because it will take too long. I recommend you watch it. If you haven't, I'll put it up in the cards, and I'll put a link to them below in the description if you want to watch them. Basically, to sum it up, I've been looking at the Goldman chart for over a month, and it doesn't look very good, and it's gotten worse. So what about what's good for Goldman is not good for the country? Well, that's the opposite of what people used to say in the 50s, 60s, 70s. What's good for General Motors is good for the country. And where does that story come from? Well, I found something on a website called thenation.com. It says, as GM goes, so goes, you know, the country. And how did they get that? Well, I'll read a little bit here about this so people have an idea what it really means. After all, and I quote, after all, in 1953, Charles Wilson, GM's president, did become President Dwight D. Eisenhower's Secretary of Defense, asked in his Senate confirmation hearings whether he would have a problem making governmental decisions that might not be in the interest of GM. He famously replied that he found it hard to imagine a conflict of interest. And he quoted, because for years I thought what was good for the country was good for General Motors and vice versa. Soon, that would be simplified to what's good for General Motors is good for the country. The author is Tom Dispatch. Strange name. But it's funny because he says here, towards the end of the article, now that's so much ancient history. Today you might imagine a new version of the old adage based on Bush and Obama administration staffing decisions at the Treasury Department. What's good for Goldman Sachs is good for the country. Well, I would say no. I would say what's good for Goldman Sachs is not good for the country, because Goldman Sachs has been pump and dumping the United States and the public for generations. You know, I've spoken in one of those videos about the article from Matt Taibbi back in '09, the great bubble machine, American Great Bubble Machine, and the vampire squid. So actually, I think it might seem that it's what's bad for Goldman Sachs is bad for the country, but I would argue that if Goldman Sachs was gone, that would be good riddance, and it would be very good for the country. And not in the short term, of course, because there would be a huge crisis, a huge upheaval, but things would get better from them. It's a little bit like what happened in Iceland, a few years ago when everything collapsed. The banks collapsed. They didn't bail anyone out, and they actually jailed the bankers. And that's the other thing I wanted to talk about with this Huawei story, or Huawei, I'm not sure how you pronounce it. One of the reasons they arrested this CFO, who's the daughter of the founder, is that allegedly Huawei is dealt with Iran, who's on the list of, terrorist states for the U.S. Treasury. And by the way, she used, apparently HSBC was their banker. Is anyone from HSBC in prison? No. What about Goldman Sachs? They've been implicated in this one MDB scandal, Malaysian Development Bank scandal. Is anyone from Goldman Sachs is Lloyd Blankfein gone to jail? Did any of the bankers go to jail in '08? That's the double standard there. But that's a different story. So I actually think what's bad for Goldman Sachs may seem really bad for the stock market and the system, but for the general public in the long term it will be good. So let's have a look at this chart of Goldman Sachs that I've brought up here, and I've been looking at for a while now. I think we were trading above 200 when I made the first video. That was, let's see, November 12th. Yeah, we were just, next to the neckline. There's a big head and shoulder there, as you can see. But it's a weekly chart, and I've gone back to 2000, actually. And I wanted to show you what happened in '08. Goldman Sachs made a high around 250. That was in October of 2007. And from then it dropped all the way down to around just below 50. And that was in November 2008, at the height of the crisis, right after Lehman collapsed. Goldman Sachs wouldn't have survived if they hadn't come out with all the TARP, all the, if the U.S. Treasury hadn't bailed out AIG, AIG owed billions to Goldman Sachs. Counterparty risk there. Goldman Sachs did a good trade, a winning trade with AIG, but AIG Financial Products, AIG was going to go bust. So, but Goldman Sachs was made whole, 100 cents to the dollar. Can you believe that? So that stopped the crisis, but it dropped from the highs 81.2%. Over a period of just over a year there, as you can see, 381 days. So now, in my opinion, the chart looks very similar. It looks even worse. That head and shoulder looks worse than the formation we saw back then. We've broken the neckline, as you can see. There's a really, really important trend line there, as you can see. It's around 170 for this year, I would say. You know, it will be above that a little bit as time goes by, but I think that will be, you know, you see Goldman Sachs break 170. Yeah, look, heads up. And I did a comparison. If we dropped 81%, we'd be back there around 50 again. And 375 days, roughly the same period, I guess. I couldn't get it exactly to 381 days, but it would take us towards the beginning of next year, the first few months of next year. I think yesterday the low was around 175, so we're getting very close, Goldman Sachs, to levels where things could get very interesting. I even think Martin Armstrong, he talked about the same, and he even said that Goldman Sachs could go out of business. He wrote his article a few weeks after I did my first video, actually. So for some reason, we've both been following this. So what's good for Goldman Sachs is not good for America. So maybe what's not good for Goldman Sachs might not be good for America in the short term. You know, the mayhem, a possible collapse. But in the long term, I would say it will be great for not only America, but the whole world, because Goldman Sachs has its tentacles all around the world. You know, they're running central banks everywhere. They've infiltrated governments, regulators everywhere. If you enjoyed this video, please give me a thumbs up, hit that like button, subscribe to the channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day. I'll talk to you later. Take care. Bye.